Hey, good morning, traders and investors. Todd here with trading analysis. I got the 2/3 of the team. Yeah, that's right. Here, Alex and Bennett standing by. And wow, guys, what a blowout print that was on the CPI, and some pretty unbelievable reactions. Some believable, some not believable. Interesting. So that's an issue, man. 4.2% on the headline. Let's Bennett, I'll take the screen right here quickly. Let's just kind of go through some of this data here. So let's hit the refresh here on all Y charts. And we're at 4.16% year over year, prior reading of 2.62%. Less food and energy year over year, 3 compared to 1.65. So food and energy was a good 110 basis points of that. So food must have been quite a bit, and we know energy prices have been moving up. But that's interesting, and there were some expected and unexpected reactions to this. So let's take a look at some of the near term here. So if we just get into the stock futures. And not surprisingly, they just got hammered. And why would stock futures? Why would stocks sell off? Well, if rates are going up, inflation becoming a problem. Can the Fed just say we're on hold for the foreseeable future, not moving up? Well, could be that the market's going to try to force the Fed's hand, and maybe they got to walk back this really dovish stance and maybe say we got to start raising rates. There's just been such a disconnect going on in this market, and I think that's what's making it so very tough to trade in here if you are not constantly rotating into the sectors that are moving. It's just such a disconnect between the Fed and the government stimulating the economy with unbelievable earnings, with the recovery well intact, with the virus mostly under control, barring a new spread, a new variant. It's unbelievable. So the markets are really starting to call their test their resolve in terms of continuing to stimulate the economy with data that's been so strong. I mean, this earnings season was a blowout, and there was really very little response to it. And I can't help but think, a lot of people would say, well, the market's priced in, they priced in a strong report, and stocks were up X 100% over last year. Maybe it's not that simple. Maybe they're saying that, okay, yes, companies are making an insane amount of money in an incredibly stimulative environment, in an incredibly accommodative environment. And maybe they're looking ahead and saying, well, it won't be so accommodative in the future when we're printing 4 and 5% inflation rates. Fed's going to have to kind of wheel back some of the stimulus, maybe get a little bit more hawkish, tighten up some of the monetary policy, and let's see if the companies can continue to earn like that. So maybe they're viewing it as that. So I think we really have to test the Fed's resolve. So futures got hit 41.33 down to 40.95. Pretty good shot there. So we're down 2/3%. We've retraced just about 61%. It looks like. Let me just do this quick right here. Drawings. Throw a retracement on there real quick. I'm a little out of practice with this stuff. I used to be really good, not anymore. I even forgot where retracements are. Oh my God, my trade analysis team is probably gonna they're rolling their eyes here right now. Oh my God, I literally forgot where. I gotta leave this to the professionals. I used to be really good at this, not anymore. So actually, yeah, we went to a 78% retracement at 41.25, and now we're backing off. So that's a pretty big move. We just check the NQ. Nasdaq did not retrace as much as the S&P, just shy of a 61%, and we are starting to sell off here now. So let's take a look at bonds, and I thought this was interesting. We sold off from the 30-year. Again, if rates are going up, that's bad for bond prices. Inflation's coming. Who wants to hold a fixed payment coupon 20 years into the future? We retraced and now we're starting to sell off down to the lows. So that's the 30. Let's do the 10. 10. Oh, no bounce in the 10. Holy cow. And just selling off. I was talking to Alex and Terry or Bennett earlier. Okay, that makes a little bit more sense, but I thought this was interesting. The initial reaction in gold was to sell off. And everyone takes gold as an inflation hedge, and it's not. It's been trading more like a deflationary hedge. So it makes sense. Like if rates are moving up and you can get some yield somewhere, 3%, 2%, 2.5%, 3% on government paper, why do you have to hold a useless rock? Is it really an inflation hedge? But I guess this reaction now starts to kind of live up to its old ways. Let's you know what? Just give me a few more, and I'm going to bring the team in here. So here's the new CPI, 4.16%. I'll go back here 10 years. You can see it's obviously the highest reading in 10. If we go back here to the max, we're not certainly overbought by any stretch over the last, call it, since the birth of the 1980 bull market. We're still in a pretty well established downtrend here. Certainly nothing towards the stagflationary 70s, the roaring 40s and 50s there in pre-29 crash. But at some point, guys, if we go back, let's just set this to 87. So let's go back to 01, 1985. Actually, let's go back to 1982, the birth of the bull market with IBM. I wish I could draw on these Y charts, but I'd love to throw a little trend line. I think you can imagine that and just bring it right across. We're going to be testing trend line resistance here on the CPI. And I think if we go to log scale, will that change things a little bit? A little bit, yeah. Okay. But we'll keep it off a log, just keep the nominal yield or the nominal percent move. And you can see we'll be coming up on resistance here soon. So is this problematic in the current environment? Yeah. We'll see how the Fed addresses this, but CPI is certainly pushing up there. Okay. The other thing that I find interesting is last week I talked about this chart, which was PCE, personal consumption expenditure, which that's the Fed's preferred inflation gauge. I was noticing the gap between PCE and PPI producers. Last week I said, I wonder if prices at the consumer level, excuse me, allergies, are going to kind of keep this gap between the two, between consumer and producer. And boy, did we just catch up on the producer level now. So we're up around 4 there on the year-over-year change there. So I want to watch the yield spread, 10s, 2s. I like going back to this chart. We've got to see what happens to the yield curve on this. I have to think that I have to go back. I don't have this data in real time if this is what this would do to the yield curve, but I just want to show you what's going on there. So 2s didn't do, 2 sold off a little bit, and then 10s as well. So I have to think to steepen the yield curve. And what's interesting here is I've also brought this one up, guys. Orange is the S&P 500, and the purple is the 10-2 yield spread. So difference between the 10-year treasury and the 2-year treasury. The last 3 recessions, which are highlighted here in gray, saw a steepening of the yield curve, right? We saw one here in 90, which was the beginning, I think, of the Gulf War, leading into the first Gulf War. Then we had the tech bubble coming off right here as the S&P sold off with the tech bubble. Yield curve is steepening. Then we had the housing crash. S&P sell off as the 10-2 steepen. This is the first time in, call it 40 years, 40 or more, that we're seeing a steepening of the yield curve along with the market going up. And they generally say a steep yield curve is the shape of a strengthening economy. But, I mean, maybe it's because the Fed is coming in already with low-end rates so low that it can do nothing but steepened. But I just find that interesting here. So I kind of feel like the Fed might be in a little bit of trouble there. So that's what's going on there. Let's bring in the team, get the reaction. Alex and Bennett. Good morning, guys.
Morning, Todd.
How are you on this?
Hey, good morning.
Inflation day? What do you guys think about this?
It's going to be an interesting rest of the week, that's for sure.
Okay. Come on, give me more than that, B.
I got charts. That's how I express my my sentiment.
I got you. What do you think, Alex?
Yeah, we talked about this, and I mean, I think it's going to be a little bit of overreaction, because I see a lot of guys kind of predicting some inflation which is going to reach incredible numbers, blah blah blah. You know, some of this stuff. But if we look realistically from 2008. When the QE was introduced, actually hedge funds was predicting a very big inflationary, and they started buying commodities. And in 2011, when they realized that the QE doesn't go into economy, it stays within the banking system, they started selling off. And now we have a situation due to COVID and unbalanced economy. We have really a supply side, and that is verified. So I think we are going to see a little bit of period when we are going to see a little bit of inflation moving up as it shows, but I don't think it is going to be some trend which can be established as a kind of a new normal. I think it really is going to be transitory. And it is really, when economy balances itself, people doesn't understand that the macro environment or deflationary technology and actually demographics are much more higher and stronger trends than a short-term supply side effects. So I don't think this is something that's going to last.
I agree with you. Yep, I think so. Like it's a supply side issue for sure. God, I'm just reading the comments too, and I was going to say something I totally forgot. And Kevin said, Todd, I want to tell you, but I was right. And you were wrong as of last Wednesday. Inflation is busting out. Yeah, I mean, okay, yeah, Kevin, you're right. And a lot of people are calling for inflation. But keep in mind, guys, we've been listening to this for 10 years, man. Since the first edition of quantitative easing, they were telling us that inflation was going to be rampant and out of control. But yeah, I mean, it's a supply side issue. I certainly agree. I think, there was a massive overreaction initially to COVID, retooling down, cutting back orders, everything. Just the economy froze because we fell victim to the fear of I'm sorry to say, but a lot of the media and just mass hysteria and panic, because that's what crowds do, caused it to swing so far one way. And now what's happening is, in fact, it just happened to occur, COVID, in the midst of a very strong bull market, and the snapback reaction has been even greater. So, yes, we just got a 4%, but there's something that's key. And Alex, I think you'll agree with this. I think there's a term that the Fed's using that not a lot of people are talking about. It's average inflation of 2.5%. It's average. It's not today's reading at 4 or next reading at 4. There's been a lot of periods of under 2% readings that, in order to bring the average up, we're going to have consistent 3, 4, 5% readings to bring the average up. Alex, do you know anything about that? And I don't think the Fed has given us too much information on that. Like, how long is it going to take to bring the average up before they start to force the Fed, or the Fed starts to get more hawkish?
Yeah, listen, Fed actually last year in June, Fed changed and publicly say on the Fed meeting that they're going to change the way they calculate inflation. So what does it mean exactly is what you're explaining? They're going to take an average on a certain period of time. And when they see this average is constant above 2%, they will react on that. So that's why Jerome Powell said last time, and people was asking him, and many unwillingly hedge fund guys, which are really good ones, are agreeing with the Jerome Powell unwillingly with the Fed. So everybody is on the same page that this is by all means, by all statistics, by all, only just a supply side shock, which will be a transitory one. And if you look across the spectrum, you will see that there is really that. It's not on the demand side, it's on the supply side. So, I mean, how long it's going to last? How long it's going to last, we don't know. It might be a couple of months. It's going to definitely overlap with this craze now, because it's masses. They're going to say, whoa, we're going to now go in inflationary period. It's going to go to 20%. You know, that's kind of a crowd thinking. So I think we will be, for a period of time, in overlapping of a different readings and a different opinions. And it's going to be a kind of a misty period, because people don't know what actually happened. I think, guys, stick to the figures, follow supply side inflation, and just see when it's going to end. And it is going to end. If it doesn't going to end, if we get, Jerome Powell was very clear, they're going to use a yield curve control or the other tool to bring it down. They cannot allow the economy to be with the higher rates, with such a depth after COVID. Nobody in the world with the same reason is going to allow the inflation to go up. So it's just the question where we are on this average close that Fed is going to do something. I think we are not even close to it. So just relax, guys, and observe. I mean, that's my point of view. It's completely unfounded to think that we are in a new inflationary or moreover hyperinflationary period. So for now, things are cool.
All right, look, I put something out there. I'm talking to the how about the 45-year-old plus viewers out there? I'm going to find it while Alex is doing the crypto, but we worked hard on the Crypt Keeper graphic for Alex from the old Tales from the Crypt. I don't think that got as much play as it needed to get, guys. We're going to need to get that a little love. I'm going to get Alex's tweet up there. We're going to throw that back out. We'll bring back Alex here. Bennett, am I still showing the, are we still showing the screen?
No, I can get you back there, though. Give me 2 seconds.
Cool.
There you go. Screen is yours.
So check this out. So we sold off, went right to the 78.6, which is the square root of 1.618 or 161.8. Sold off, came right back to it, tried to push through. And usually the old rule of thumb with retracements is if you break the 786, you go to the 1272. No, excuse me. God, guys, I'm so out of practice with this. I'm sorry. This is the square root of 61.8. This is the square root of 161.8. So you break this square root, you go to this square root. But like this is some pretty interesting pre-market. We're selling back down here on the S&P. Let me just see. The NASDAQ's doing it just below the 618. Bonds down at the low. I don't know if I get dollar sold off there. Alex, the dollar sold off there on higher U.S. rates. You're gonna have to make sense of that one for me. Not now. Let's get Bennett in here. But when you're up, just think about that one for me. And then gold moving up. I don't know, man. This is bonkers. So we have a lot more, guys. We have a lot to bring to you in the show. Terry's not here. I will take over sort of sector rotation, show you what I think's going on there. Massive rotation that's occurring right now, creating a very tricky trading environment, investing environment. So we'll talk about that. But let's get the index technical point of view from a man, the Elliott Wave pilot.
Sounds good. Let's do it. Good morning once again, YouTube. Thank you guys for tuning in. So let's do it. Hard right edge of the motive wave chart. Let's start it off taking a look at the S&P. And right now, kind of going off of what Todd said out of the intro, it is a very mixed market environment. Even more so when you start to dial in the Elliott wave possibilities that currently exist between the S&P, the NASDAQ, and obviously leading sectors. So first of all, let's look at the S&P 500, and what we're going to start with here is the daily chart. And we've been kind of operating under the assumption that regardless of what the higher degree pattern is, we've talked about the subjectivity of the count off of the COVID low, that regardless of that count, we anticipated this 5-wave rally to come to completion perhaps into the summer trading months, and then we would be faced with a corrective pullback. We have seen so far a move that can best be described as a 3-wave trend. Off of the March 4th low, we have 3 waves up into the April 16th high. The third wave, coincidentally, was 161% of time elapsed in wave number 1, very typical 3v1 time relationship. Going into last Friday, we did have a pretty decent move in the S&P to the upside. It took you all the way to a 161.8% external retracement of the decline that we have here in A. So between April 16th and April 20th, an external retracement of that was 161.8%. Getting you off of the daily and down to the 195, we had a zone of caution up here because we acknowledged the fact that this could very well be some sort of a false breakout in a B wave of an overall flat correction. We got through the 1272. Typically speaking, you'll stop at the 1272 in the event of an Elliott wave flat. We got through the 1272 in a 5-wave trend. So we had an impulsive move from May 6th here into the May 7th high. Obviously, that has since failed, and what we've seen thus far is a move that can best be described as yet again 3 waves, down in 1, up in 2, down in 3. Here's a sideways consolidation off of yesterday's low. That took you to a 38.2% retracement of the wave 3. If I take you off of the 1 hour down to the 15-minute chart, you can see that inside of this possible C wave of an overall 4th wave flat, we do have an acceleration gap here in the 3rd wave position. That is a little bit concerning. However, the alternate would essentially suggest that the post-triangle 5-wave move that we saw there into the 1618 external retracement was all of the wave 5 position, and that just falls so far from the traditional rules and guidelines and common fib relationships between wave 5 and the other segments of an impulse that I have a hard time getting behind the count that says that was 5 waves and we're done. So the way I'm treating this is an ongoing wave 4 flat prior to resolving higher in a wave 5 position. Now, what's interesting here is with the completion of the B wave and a projection of a 1272 external retracement of that, it would take you to 4087 here in the S&P, which happens to be just above your 4th wave fib clustering. So you have your 38.2% retracement stacking with your equality to wave 2 of the same degree. This would make for a very strong case of alternation between the wave 4 and 2 corrective patterns. Now, if we get into this zone and we start to break lower, we will certainly get concerned and start looking towards wave count and validation of the impulse at 3983. Now over to the NASDAQ 100, because the wave count here in the NASDAQ 100 is a little bit tricky in my opinion, and what we have at work is likely an ongoing flat correction here as well, however, of a slightly higher degree trend. So we have 3 waves down here into March 5th, 3 waves back. Notice this took you between the previous high and the 1272 retracement. We then have 5 waves lower, 3 waves back here in orange wave 2, an additional 5-wave move into some sort of a retracement. This would give you continuation down towards 12,378. So this is the possibility that I'm watching for in the NASDAQ. Let me take a quick look here. Just watching price action here in the futures market. Let's say theoretically we hold support and we start to continue back to the upside for some reason. What could the possible interpretation be at that point? Well, what's interesting about this move is thus far yesterday's bounce was staged off of equality of the initial decline, so between April 29th and then May 4th. A measured move projection of that from the B wave retracement took you to around 13,149. So we are seeing a little bit of a bounce there. Could this simply be an additional 3-wave counter trend move, very similar to this higher degree structure? It is a possibility, but I certainly don't favor that. I do think we still have further downside left in technology, semiconductors, so the NASDAQ 100, the XLK, the SMH. Over to the XLK, you can see here, this chart also helps illustrate why I'm not a huge fan of the ABC. interpretation or possibility in the NASDAQ. If this were to be some sort of an ABC and we're done in technology, the C wave is a more aggressive angle of descent, which is actually kind of goes against the typical C versus A relationship. Typically speaking, your C wave is a less aggressive angle of ascent or descent, depending on where you're tracking it. So in the XLK, we can derive the exact same interpretation that we looked at in the NASDAQ, that we have 3 waves down, 3 waves back. Here in the XLK, it took us right to the 1272 external retracement. We now have 1-2 and looking for continuation to the downside. So keep your eyes on the support zone. Here are your key zones to be watching going into the week. We've got 40.5 to 40.87 as a clustering of fib support for the S&P 500. If we start breaking south of that, look to wave count and validation at 39.83 as a cautionary level. And for the NDX, the NASDAQ 100, I do think we are progressing well inside of this flat, and I will be looking for additional downside. That's it from me. Back over to the team.
Thanks, Bennett. You know, I think you and I are pretty comfortable with this. I just think at the heart, I think I'm probably more bullish, maybe for reasons other than just Elliott. And I appreciate the conversation back and forth we've had. Like, I just throw me the screen if you don't mind. Like,
yeah, certainly.
I can't help but pull up this this Apple count. This one for me has just been pretty rock solid, and we've had a couple of experiences here at TA where Apple dictates where the rest of the market goes. And I think Kathy Wood made a comment that Apple is her equivalent of her cash. I mean, they have what, 200 billion and whatever. I don't know the exact number, 200 billion in cash in the balance sheet. You know, if we look at this from September 19, 1, 2, big old 3, I just see this as such a beautifully set up Elliott wave pattern where wave 2 is directional and to the point, and wave 4 is wandering and sideways. If you just get down to the week, bring in another degree, you know, provided 116.21 holds an Apple, even get down to the daily, oh man, it just really looks like a triangle to me. And if we just take a look at this pre-market, oh, that's the Roblox trade I have on. Apple's trading 123.86, kind of pushing the lows. That's one thing. And then, you know, what about what's wrong with the triangle interpretation on semis, Bennett? Do we have a reason that we don't like that one?
No, not at all. And I completely agree with your counts there. They're in Apple, the triangle and the SMH.
Yeah. So here's the equivalent in the semiconductor holders. So this would be a little less progressed, where Apple is more progressed. And when was that time, guys? It was probably 4 or 5 years ago where Apple finished. It was such a weird WXY count. Apple finished the count, led the whole market higher, and then shed light on what the actual wave count was in the index. And I think Trade Analysis was ahead of almost everyone out there on that one, I'm proud to say. And I wonder if the same thing's kind of happening again, where triangle completion could be there, and Apple provided 116 holds, and then semis just need to do a little bloop bloop, hold 224, and then we're off to the races there in the semis. You know, just watch some stocks pre-market. You know, take a look at some of the financials with the move in rates. I mean, financials are just ripping. Take a look at Bank of America ripping up, big move up there. Goldman, not so much. That's interesting. JP, pretty good move up there. So financials are moving. Industrials, energy. Let's see, what did crude oil do there? Crude oil sold off. I don't get it. What do you mean crude oil sold off? In an inflationary number? Alex, what the hell does that mean? Alex is sleeping. I don't get it.
No, I'm not.
How does crude oil sell off with a 4.5% CPI print? What does that mean? All right. Well, you're a lot of help. Thanks. All right.
Did we?
Alex,
I think we're losing his internet connection.
Oh, okay, got it.
Am I there?
There you are. We got you now.
You're there.
Oh.
Yep. I thought the
Yeah,
crypto
I mean-
cartel kidnapped you again.
No, I'm there. It's selling off, but it's not that drastic. So let's see what the end of the day will come. But actually, this inflationary thing you will more see in dollar yen than in dollar. So if you see dollar yen is moving up and we have upside targets, dollar is just from various reasons. It's kind of a sideways in price movement. But these yields you're going to see in dollar yen, as particularly is moving on the upside as all the yen pairs are doing for the last couple of weeks. So I'm going to go over that with the charts.
Okay, perfect. I'm just going to throw a couple, thanks for that. I'm going to throw a couple individual names that I'm watching here, guys. I'm going to throw those at you. And then I'll turn it over to Alex. He'll get us caught up on the macro and the crypto space. You know, there's some of the big moves that we've seen in the massive high beta stocks that have just gotten taken out back and shot this year that worked so well last year. There's some interesting price action that I've been watching. One of which is Palantir, and I'm kind of watching this guy. Ooh, shoot! I'm kind of watching this guy for an entry. And if you take a look at the weekly candle, it was a big old scoop down into support. And you know, we have what three more days left in this weekly candle. But if we look at this big old 3-wave move down to some support, it's starting to carve out a little bit of a is that a hammer pattern or what's the one below? I forget. I never knew my candlestick patterns. But if we get down to the daily, you know, you have a nice 5-wave move down, A, triangle B, down in a short C, and then look at that candle yesterday. I mean, that's a monster outside reversal candle. Holy cow. So I just wonder where we are in Palantir here pre-market. If that reversal were to hold, that could be a good entry. So we're at 1990 right now. We're right where we were. So we were up pre-market, sold off post CPI. So we're right where we closed yesterday. That's fine. If that guy continues, watch that one. Tesla, you know, I don't love the action here in Tesla. I don't love the wave count. I'm very bullish on the stock longer term, but it's a broken count here. You know, maybe this comes into some kind of triangle, whatever. But you know, you're talking about Palantir, you're talking about Teladoc. You know, all of these are major holdings of ARK, Kathy Wood's ARKK fund.
Check the.
Which one are we talking?
If you get a second, check Teladoc's red count. I'm just curious what your thoughts are on it.
Sure. Okay, so same situation. Oh, that's nice. Yeah, perfect. That's really nice. That's more directional than. That's a nice count. That's an easy count. Yeah. Kind of the same thing as Palantir. So the point is, guys, I don't know if you can completely write these things off. I mean, if you look at the percent gains they've had over the last couple of years compared to 300 down to 140. Okay, so it got cut in half. Big deal. You know, the stock is up. Let's just do this quick study. The stock up 50% or down 50% in a little while, but it's up 3,218% since 2016. All right, so 3,200% compared to a 50% drawdown. When you're trading in these kind of stocks, that's the kind of volatility you come to expect, and you need a position size for in the portfolio. So I like that. Let me throw an alt 4 on there.
Yeah, it's right there with little A triangle B.
Do a little C versus V or C versus A way through there. I mean, that's a pretty solid little fib support zone there in Teladoc. So like Palantir. Another one, kind of getting away from Kathy Woods, and I still hold it. I hold it for my kids in their college fund. You know, she's taken a lot of heat, I think, in the news with, oh my God, but you know, you're missing all the move in energy and industrials, and I think there's a statistic. Only 1% of the people who've entered her fund have exited at a profit. I hope I have that right. And maybe half of the new money that's come in, half of the money that's coming into her fund is now underwater. But she's been very clear in her mission statement that this is for companies that She doesn't want profitability up front. She wants growth and innovation with rewards that come years down the line. So you have to know that that's the time for holding ARKK. And the same conversation can be had. I mean, dude, what is that? It's like that's a blip. That's nothing compared to the growth that we've seen. So percentages really, really matter. So I like it. I hold it for the kids. If we can get some down into the hundreds or 90s, I'm going to buy more for the kids. So I'm not writing off the tech boom yet, just because interest rates are moving up. I think we're still in the midst of a tech bubble, not a tech bubble, excuse me. I think we're still in the midst of a tech rally. We're seeing some really good rotation into materials and industrials. But my point is, like, that's not her mission statement. That's not what tech investing, for those who have the proper risk tolerance, position sizing, and time frame. I don't care about quarter to quarter. I mean, I hope this thing's worth $1,000 a share when the kids need the college money. So, all right, let's send it over to Alex and do some cryptos. And oh, wait, Alex, one more thing. There's one more stock I meant to tell you. I just put a little position. I'm going to send it out to members today. Put some Tilray to work. I bought the first of the cannabis stocks. Tilray had the merger with Afria. That went through. I like the setup here. Nice big old deep wave 4 here. You got green 1, green 2. Nice big breakout there, and green 3 that breaks down into 5 nice waves. A, expanded flat B, and then a nice 5-wave move down. I like the little double bottom here in Tilray. I think I bought some. What did I do? I bought some. I think some Delta 70 calls here. I bought some July 16 calls. July 16 calls. And then the other one that I'm working is I bought Roblox just before earnings. I put a video out on Twitter. Guys, did you see that video where I put out on Twitter with asking our kids, would you rather?
I think I did. I think I know which one you're referring to. Didn't want to speak out of turn.
No, dude, interrupt me anytime, please. So we asked our kids and our neighborhood kids, if they're not outside playing like on the jumps or in the tree houses, or we put a zip line in, they're playing freaking Roblox. It's unbelievable. So, I mean, Robux, which is their digital currency, that the only way you can earn Robux on this new video gaming social media platform for kids is for the parents to put their credit card in and buy Robux, so then they can gain their social status and progress through the game. But so we asked our kids, would you rather have, and my friend Ryan Daly, who trades for Goldman, he trades for ACO, which is their private wealth management division. He's my neighbor. We asked our kids, would you rather have $100 in cash or $50 in Robux? And it was unanimous, $50 in Robux. I put that out on Twitter. I didn't have the heart to do this, but then we asked them, would you rather have $1 in Robux or $100 in cash? And they still chose the Robux. Like, either we're doing a terrible job at teaching, the value of finance and cash and
opportunity costs.
It's unbelievable. Oh my God. So Robux is a holding. I have it now. So I bought a pre-market and they crushed revenues. Stock was up 20% yesterday. So we have that. I also have a little butterfly on with Roblox. It's not too late to put this on. I'm not up that much money on it. I'll show you the trade I have on there in this account, I think. Yeah. So it's in this account right here. I have a 21 May 70, 75, 80 call butterfly. So we're trading right around here, there. So this guy expires just about 9 days out. So I'm kind of thinking we might consolidate here into earnings. So a couple trade ideas. All right, Alex, take it over. Get us caught up on macro and crypto, please.
All right, Alex, I'm passing you the presenter now.
Yeah,
let's
thanks.
do it.
Yeah, okay, guys. I must tell you, Todd, I completely agree with you on ARC. So I think that's a completely valid view that you said. So I'm just going to pull my charts and I'm just going to show you a few of the charts on the macro space. I'm still undecided on this dollar index for various reasons, which we don't have a time to go into now. Dollar is moving down from these highs in March 2020. Our view was that this was the end of the five-wave move here. But currently we are still didn't break this support. It still technically can be some type of an X wave. But I'm kind of prepping for a possibility of a small punch to the downside. I still don't know. I'm kind of trying to decipher, and there is a more clarity into more directional move. I'm even thinking, Todd, that potentially the five-wave move is done, and this was all what we are going to see potentially in a wave B. I'm just kind of meditating on that hypothesis. I'm going to track this, but for now, I'm still going to want to see what it's going to do here, because on the rates move up, I think we will see potentially one more move up in dollar. This might be also some type of a big triangle and then move on the upside. So not much on the dollar front, because as I said, if you look the FX now, you will see that clearly the rates move on the upside. It is very visible on dollar yen, which was moving higher while the rate starting to move on the upside. So we were signaling that, and for now, we still see a possibility on this dollar yen chart. We are going to trace a nice five-way move on the upside. Very easy wave count, bleeding diagonal or 1, 2. It really doesn't matter here in a wave 1, down in 2, up in 3, nice pullback in wave 4, reaching equality, 50% retracement. Impulsive move from there, 3 waves pullback. So I expect to see these rates to transmute into a higher dollar yen in this first 5-wave sequence, while the dollar might be muted for some time. So for the commodity spectrum, if we look also some of the things that I can just give me a second to move this so I can show you the copper. So the copper chart is going as per our last view here, I think last week, towards our target around 5.36. This is the futures. So I think a little bit more upside before the correction comes. There is a clear five-way move potentially ending. So I'm going to start to look for some of the retracement in commodity spectrum. As you can see, soybean is also due to situation of COVID in Brazil. Is tracing out the third wave on the upside, very impulsive, very third wave character move, if you can see here. So we are going to see some pullbacks possibly in commodities and dollar moving on the upside. And on the macro spectrum, on the yields, also Bennett wave counts and mine one was pretty much spot on up to now. We are still not trading above equality, but we deciphered this, and Bennett had a really very nice wave count on this ascending diagonal here, predicting a pullback, which happened, and we are gonna attack now probably these very strong levels. We might bounce off a little bit, but eventually I think we are going to, in the next year, creep higher in this inflationary pressure, but only for some time. And that's why I said we are going to have a very muted response to this possible inflation. People which don't understand the complete picture, we are going to be very bullish on inflation. And I think the macro guys which understands that the underlying inflation is going to be transitory. It's going to kind of account for a slight period or a year and a half of possible inflationary pressures, and then we're going to should start coming off back to this 1.2, 1% on this retracement. And I think this is a valid kind of a point if you look also the spectrum of a possible movement in dollar and in other currencies. So what have been very popular lately is this asking from many clients about this GBTC, which is a Grayscale Bitcoin Trust. And people ask me a lot about this chart, why I am bullish for another leg in Bitcoin. If you look also this chart, it's clearly seen technically that we are in a sideways consolidation as in Bitcoin. So there is a clear 5 waves up, pullback down, very clear pattern, 5 waves up in wave 1, pullback down to the previous wave 4, directional wave 3, consolidation in wave 4, and 1618 at 73.63. It's definitely going to be possibly a high of the wave 3, pullback in a wave 4, and finishing up in a year after this pullback is finished on the upside. So if you look the Bitcoin chart, situation is also very clear. I've been seeing people being kind of nervous, but I mean, from the higher perspective, nothing is going on a Bitcoin. It's just still in a sideways consolidation. Alts are moving on the upside, but the Bitcoin, due to our Bitcoin dominance chart, is just moving sideways. And I think this sideways will consolidate further and then finish with this also fifth wave on the upside. And then we might go into relatively kind of a longer crypto winter, because I think majority does not understand that markets are not linear. And I warned about this several crypto labs ago, that we are seeing this selling pressure starts to increasing. So after this very beautiful move on the upside, a very clean pattern, very clean third wave, we are seeing a selling pressure. So here, this is the sign that bulls and bears are equal. This will potentially, finally, if we hold this 43,000, result in one more move up when the bears will take over and send us down into a potential triangle or WXY. So I've been giving a webinar to our members, extensive one on a Bitcoin yesterday. We went over analyzing how much this move to the downside might go, and there is several options. I will not go into that depth, but generally I think we will go in a little bit of crypto winter very soon. And after, we will strike to this price, which was Todd original kind of a target, which goes from 150 to 180K in the next couple of, let's say, 1 or 2 years. I'm still not clear on the timing. I need this wave 4 to unfold either to equality or towards 1618. So for me, this chart for now is very clear. There is not much kind of a unquestioned resolutions here. We are still consolidating with a possible one more move up. I'm bullish on Bitcoin as long as we hold 43K. So on the other alts, I will just show you a couple of them. We have been very bullish
Alex,
with our members.
Hey, Alex, before you move on, I don't want to interrupt you. You said in the beginning that with GBTC, people are asking, why are you bullish? Are you getting pushback in the community as to being bullish? Or did you said, like, you kind of inferred that people were questioning your bullishness on Bitcoin. Is that right or no?
No, people are kind of a more reactionary, because we had 2 periods of selling very sharply in the last 2 weeks regarding cryptos, and people were flipping more on a bearish side because of the kind of a more protracted levels around 45, 42K. But I said in a sense that we still don't see any signs that it might happen, so I'm going to stay within these boundaries until I see resolution. Where I don't agree with the majority of crypto community is actually on bullishness, because people and majority of technical analysts are bullish directly to 180K. So that is a major, that is a major disagreement between my analysis and most of the crypto technical analysis, because they see a directional move up until 2021 towards this 180K, which means we're going to add another trillion of market cap just like that. So I'm not kind of agreeing with that. I think there has been a very warning signs that the methodology we use, it's clearly giving us this 200% projection as a clear possibility of the possible downside move. We have been going through analysis, if you remember, you and I together on this, and I think also this is a very key point which I will show you now. and I think you will gonna remember this. You remember when we analyzed this monthly RSI, which is a very interesting thing, and we analyzed for the members this touching of this 91 and then retesting it. So I think the same thing is going to happen. We're going to have a move down, and then we're going to retest on this one. You remember this discussion we had? So I think
I love it. It's
yeah.
I think it's hard to ignore that. That's so simple and so logical. But yeah, I love it.
Yeah,
I love it.
Yeah, it's very simple. So I think people will be surprised about this. This will be my key levels: 774K to 80K, and then I'm counting on a pullback. And then I think people should position for this major bull increase. I think it is going to be the major and the most increase into Bitcoin on the upside since now, because we're going to go from 30, 40K to 150, 180K. So I think we should all kind of be aware that this pullback is not permanent one in cryptos. Crypto space is booming. Alts are booming. There are many useful projects there. And actually what we talked about last time, it happened. Dogecoin, famous Doge one, is now being called to be potentially serving into the Elon Musk X Space program. So there has been kind of a tips that Elon Musk might allow that SpaceX travels will be allowed to be paid in a Dogecoin. So he's trying to find some kind of a role for this coin in his Tesla space, which might eventually happen. So I think we were right. Dude, on that, on the last one.
Do you remember about 2-3 months ago on CNBC, we were talking about Tesla and Bitcoin in the same segment, and I said to Seema, I was like, just think in the future, we'll be able to take a SpaceX ride and pay for it, to space in Bitcoin. And Seema and everyone kind of laughed and rolled their eyes. I was wrong. You're going to be able to pay for it in Dogecoin. Like, yeah, what world are we living in? It's unbelievable.
Actually, the Dogecoin is not the winner. The winner is, and I will show you clearly the winner now. The winner for this 2021 up to now is this coin, which actually gained over something like we went in 1 4-hour candle from 0.001 to $23.
Do you know what the market cap was on that, Alex? I was talking about it with my friends who are all traders, because there's no way. I mean, like, here's a dumb question. Like, it goes back to GameStop. Like, remember that? Like, I didn't even know you could be short, have an outstanding short float greater than the outstanding short interest greater than the open interest of the stock. Can you take, let's say, a couple $1,000,000, run a coin up such that it has a market cap like X, like multiples of that? Like, even though the market cap goes up to $1 billion, there's not $1 billion of buyers out. There's no way you can realize that gain. Do you understand what I'm saying? Like, I understand what the market cap is, the amount of coins outstanding times the price, but this is a dumb question. I maybe I'll figure this out in the back half of my career, but can you take a very small amount of money and create a market cap that is just non-existent, that there's no way you could realize liquidity yet? You know what I mean?
Yeah, I agree with you, because there has been a lot of these pump and dumps, but actually this coin, which I just showed you, although it was round up on a very small amount, and I will check that. I agree, and I think that is the case. Actually, it is it has some use, because it's going to be used to be payment within the social platform. So if you use this coin, basically, you will be able to pay me over Twitter or Instagram or Facebook or any other social platform with this coin, which is a kind of a certain use. So it is not kind of invented just to pump and dump thing. But I think somebody took it up, prop it up, and then it went down to 0.01 in less than an hour. and it's clear it's something like that. So I'm just saying it's a winner by 1% of a move on the upside for this year. No other coin produced this kind of a move on the upside on a 4-hour candle. Yeah.
So you gave me an idea, like pay people on Twitter and social media. I think, Alex, going forward, I'm gonna start paying you in crypto. I mean, you got to stay behind your product, right? You don't need dollars. I'm going to pay you in crypto.
Unfortunately,
right, so let's move on quickly. We're getting late. I want to address Drew's question, which is really good. Alex has got his own crypto webinar live stream tomorrow at 9. Alex, do you mind if we push on? I'm sorry, we're running over. Is there anything else you wanted to finish with strongly? Is there anything you want to throw in there, or are we okay?
Yeah, I just wanted to say that I see also on this much of the altcoins the same picture. So my overall view, I just want to support it technically with many of these altcoins, which I see are finishing the first patterns here. So I see this also potential of a great entries after a correction. So I think crypto market is just in the beginning, especially with some very good projects, and they will continue to move upside. Bitcoin is already expensive, so try to find the nice projects which are going to have a big role. And look, Crypto Lab, everything is there.
Yeah, definitely check Alex out tomorrow, 9 o'clock. Good work there for sure. I'm interested on your thoughts on Ethereum. We're gonna have to hold that off. But Bennett, let me take the screen real quick. Our good friend Drew Baptiste, who's my good friend and well-respected industry professional. He was the global head of technical analysis for JP and Morgan Stanley. I believe that's right. Yep. And the biggest investment banks know him. Hedge funds know him. He's a friend of ours. He's been on the show. He used to be my neighbor before he moved upstate. So he was like, "Hey Todd, what do you think about the 5-wave move in Apple? We're talking about this being a potential 5-wave move."
Mm-hmm.
Let me just see.
We've got Drew, that count in yellow.
Okay, cool. Drew, are you still here? Let me just get up the YouTube window. I don't know if Drew took off, and I'm sure he's got stuff to do, like take care of his beautiful grandkids or
enjoy the beautiful Florida sunshine.
Enjoy. Yeah, actually, he's not there anymore. Let me just see. Drew, are you still here? There's a little 30-second delay there in YouTube, but I'm going to go like he is. And Drew brought up the point. He's like, Todd, does the 5-wave move here, Bennett, am I showing screen?
Yes.
Okay. The 5-wave move in Apple, does that give you pause? And it does. Mm-hmm. It does. And I would really like to know your thought, Drew. For me, I am not an Elliott wave purist, as I think you would agree. You're not either. I've not only come to tolerate, I've come to expect one of the waves in a pattern to be less than ideal. In fact, the more perfect the pattern, the kind of the more cautious it makes me. This certainly looks like a 5-wave move, and I can't disagree with that. In a good triangle, each of the swings need to be 3 waves. Like A's 3, B's clearly 3, 1, 2, and then 1, 2, 3, 4, 5. 5 waves for C. This does look like a 5-wave move for sure. Okay. So, all right, what if, but then if you look at this, like, all right, could this possibly be truncated? Could this be 5, this is B, and this is C, and then this goes like this, A, B, C. Can you have a truncated C within C of a triangle? I don't know if that's against the Elliott wave rules that Bob Prechter gave us and bestowed upon us, that these are the unbreakable rules. I don't know. And plus, like, one of the legs in a triangle or in a pattern that's this old is expected to be less than ideal. The second part I would say is, all right, putting all that aside, this needs to quickly turn into a 5-wave move. If this is going to be 5 down, 3 up, this needs to pretty much go impulsive on the downside quickly, because if this is 5, that's 3, okay, we're going to do a little 3. I mean, what kind of pattern would that be from an Elliott point of view? If that's 5 down, that's ABC. Are we doing a 1, 2, 1, 2, and we're going to get smoked? Possibly. But I've also find, you know, that when you start painting yourself into the 1, 2, 1, 2 corner, like literally in the corner of the room where it's like a poker player, like leaving yourselves like long odds to get your money back out of the pot. You're putting yourself in a bad position. So this needs to quickly go into a 5-wave move. And if we get down to the half-day chart, I'm not seeing impulsive activity yet off of this high. You've got 1, 2, 3. You know, you've got some overlap here. That's not ideal. I don't care so much that you have some overlap in a first wave position, but it doesn't look impulsive on the downside yet. It really looks like a 3. If this was a clear 5 and then we're doing another 5 down, okay, maybe it's 1, 2, 1, 2, and Apple's about to get smacked. I just kind of chalk it up to, you know, usually I come to expect one of the swings and an Elliott pattern to be not ideal, and that actually gives me more comfort. I know that's not, you know, that's not anywhere written in the book. It looks like Drew's gone, but you know, I'll throw that to him and see. I'm curious what you guys think on that. You know, the fact that, you know, stocks got hammered here on the open. Let's just do a quick little recap of where we are heading in the members webinar. Roblox, stay up there, baby. So futures are down. Market's down 0.6 right now. Let's just get down a little 1 minute, see what the price action is. A little choppy here on the open. Some pretty good swings back and forth. Not making too much of a move. It looks like we got to make sense of this crazy data. NASDAQ is down 1.14, but is up off the lows from the pre-market. Let's check bonds. Bonds right down in the lows. Interest rates going up. Let's check gold. Gold is down. Pretty interesting there. Financials only up 0.4. That's the only sector that seems to be moving. So that's interesting. All right, guys. Bennett and Alex, closing thoughts, guys. What did we miss? Announcements or what did we leave out?
No, good session. I just took over the screen really quick. We have that count here in yellow. I think Drew took off, but for those of you tuned in watching, you know, if this is some sort of a 5-wave move down, you do have decent proportionality between those two corrections. A little bit of alternation. Wave 5 is equal to 1, but more importantly, we're just not seeing the breakdown here as of yet. Now, we do have some counts, you know, which would call for a longer, more drawn-out correction in technology, but the signs just aren't there yet to support that. And even if that's the case, our longer-term counts still point to the upside, which is why we continue to stress time horizon and why it's so important. You know, one chart really quick I want to throw out here. Microsoft, if we do start to see that move lower in Microsoft, not sure where that count went. Here we go. You know, going off of the 2009 low, we have a move up in 1, sideways in 2, 5-wave rally here in green wave 3. Green wave 3 was beyond 261.8%. What's interesting is if you take the 243 channel here, you can see we've been just kind of meandering higher within this particular channel. And the price level that we've kind of found some key resistance at, obviously being $250 being a psychological price level, that is equality of orange 5 and 1 here for Microsoft. If you look at the XLK, we've got a count here in green, which says we have confluence. Yeah, this is a little scary. It is a little bit frightening, but regardless, the 5th wave implications still remain. So we have a move up in 1, down in 2, the subdivision of green 3. Some interesting confluence at work here. You've got the 2618 of 3V1 of the cycle degree, and inside of the cycle degree, the 5-wave trend gives you equality of 5 and 1. If we start breaking south of that move, maybe we'll consider this. But what I found really interesting is if we take that same interpretation of the NDX, we have the same level of confluence between the green 3V1's 2618 and the orange primary degrees 5V1. Unlike the, and of course, Motive Wave wants to give me a bad time, but it's okay. we have yet to reach it. So in the XLK, the confluence at 145 did hold. What if, perhaps we do have that larger correction on the horizon, but perhaps this is just the initial 2 waves inside of that upside target. So equality of CNA here, maybe we can exist in a sideways triangle, flat, but regardless, if this does resolve higher, we could be looking to that upside zone. So I just found that interesting in light of the conversation with Apple.
Yeah,
also,
let me just finish that, Alex, real quick. Semis, guys, semis have been lagging for some time, but there's no impulsive activity on the downside yet. There's none. Semis topped in February of 21, down into March, clearly a 3-wave move. 3-wave move back up in April, and then just another big old 3, kind of a complex move down into May. We're just not seeing it. Even though they're laggers, there's not impulsive activity on the downside yet. So, Alex, go ahead.
No, I just want to add that this Bennett Scouts on the NDX kind of agrees with this Bitcoin 4th wave pullback on a larger time frame. And we know that some of the stocks are very correlated with the technology in the NDX. So this will exactly paint the same picture in the Bitcoin. We will go in a 4th wave and the 5th wave up. So it's a kind of, I think, a potentially valid wave count. We go up with another 15, 16K, and then we might roll over for a small correction. So
yeah. And last one, Bennett, before we sign off, throw the Russell up. Nothing impulsive on the downside with the Russell. Give me like Russell red count. Just a big old triangle in the small cap, like a small cap sandwich.
Yeah.
I mean, there's nothing impulsive. I mean, anything can happen, but there's nothing impulsive on the downside for small caps. And they look very buyable down at like 2,100 in IWM.
Absolutely. It's an interesting market.
Let me there's so much I want to show you guys, but we got to get moving. This was interesting. We'll save it. We'll save it for another week. That's fine. Guys, let's end it there. We got to do the members webinar. Hopefully enjoyed that, guys. We're getting longer and longer. We missed Terry today, but if you don't mind, throw a little click the little thumbs up button there. Turn that button blue. Let the evil Google algorithm know that you enjoy this content, and maybe other people would as well. If you would do that, that would be great. There's so much good content on YouTube now, man. Before this stock market bubble, not bubble, I keep saying it. Boy, I'm like, it's Freudian slip twice there. Before this massive bull market, there wasn't that much stock market content on YouTube. If you guys watched and noticed, as there's been this big flux, stay at home into, these new age tech stocks, the amount of YouTube content is exploded. And I'm interested to see if so much content will continue to be there if we are in this extended tech sell-off and this new age stock sell-off, if that content will be there. So point is, it's really competitive on the YouTube space. Trade analysis, we've been doing it for a decade, and we'll do it for another decade at least. So hopefully enjoy the content we're putting out there. Love your feedback. And if you would just click the little thumbs up button, we would appreciate that. That's the best thing you can do for us. If you're not a subscriber at Trade Analysis, throw a comment or question down there, and we'll try to address it the best we can. And thanks for your participation, and we'll see you guys next week. See you, boys.
Sounds good. Have a good one.
See you guys.